Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus Canada. Overall, the US dollar is getting hit today, and that is being reflected in the dollar Canada as well as it trades to new session low. So let's take a look at the technicals that are driving this currency pair. I'm going to take a look at the 4-hour chart for this currency pair. And if we go back in time and look at the move up from this low going back to the month of July, this is the July low, and proved to be a level that where the price built to the upside, and it didn't peak until we reached this period at the early November, and we found some willing sellers near the 139 level, and the market rotated to the downside. Admittedly, the price action has been volatile to the upside, or to the downside, then to the upside, and then back to the downside, and back to the upside right through here. And of note, right here on this corrective move, the price did find the resistance sellers against the 100 bar moving average on the 4-hour chart. We did it again sort of here, although the price did move above that moving average, only to find willing sellers above that level. We had the failure, and the buyers couldn't take the price higher, and the price has since moved to the downside from that point that was in trading last week. Again, this is the 4-hour chart, and each of these dashed lines, vertical dashed lines, represent the start of the week at the end of the week. So in last week's trading, we moved up to test the 100 bar moving average, found willing sellers, and then rotated to the downside and closing right around here. In trading this week, we saw a rotation to the upside. It took the price into this swing area between the 1.3654 and 1.3668. That was during yesterday's trade, and we could not sustain momentum above that. The high of that swing area rotated back to the downside. And in trading here today, we're seeing a further selling momentum. Now, also of significance is that in trading last week, the low price right here stalled right against that 38.2% retracement level of the move up from the July low to the high price that we saw in early November. That 38.2 came in at 135.90, and as you can see, the price low bottomed at a level, bounced up into the swing area, and rotated to the downside. And trading more recently, we've seen the price extend away from that 38.2% retracement. So the sellers are making a play, and that 38.2% retracement is now going to be a risk-defining level. Stay below the 38.2% retracement, keeps the sellers more in control. We look for further selling. Having said that, we're also approaching this key blue line. This blue line represents the 100-day moving average. That comes in at 135.507. The price has not traded below that 100-day moving average since these days right through here. But as you can see, those were short-lived, and the price quickly rebounded against. Again, this is 4-hour bars. So only 3 4-hour bars in the month of September fell below the 100-day moving average, and the price rebounded off of those levels. You have to go back to August, where the price had more time below the 100-day moving average. That's where the price started to move above that level and start the bullish run to the upside, or at least tilted the bias more to the upside. So the 100-day moving average is going to be a key level to get to and through if the 38.2% retracement can now hold resistance, and that's going to be the trade and the technicals that are going to define this currency pair's bias going forward. The levels are in play. We'll see how it all pans out. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.